Live, and I guess we're live. Good morning to everybody. Welcome to Behind the Markets on the Thursday edition, what we title Enterprise Thursday. Good morning to you, Vernon, and how are you doing, my brother?
I'm doing great. I'm fantastic, and good morning to the viewers and the listeners. It's a wonderful Thursday morning, and I think days in the month of June are cruising pretty well. I don't know how is your day so far, Mtwale.
I'm still curious as to what is the wonder and joy behind June for Vernon, because I'm telling you, there's something happening here, Vernon. There's something happening, but I think we'll leave it be. I'm not going to continue coming after you, but there's something happening that makes your June so wonderful, my brother. But anyway, let's get started. It is Enterprise Thursday, the 22nd of June, 2023. Let's get kicked off with what we have on the markets today. Now, today we're going to be dealing with our market roundup, and the first things in our market roundup, Kwacha has continued down its slide. Has continued down its appreciation cycle. So we have seen it go up by a percentage point, 1.24% as of yesterday on the interbank rate. Now we did see also that it also started to wobble in a very short range yesterday, but we also did see that the Kwacha also remained strong even on the remittance market, where it's actually trading at about 17.29. For those who are trying to do remittances and they're trying to sell dollars, we are seeing that the international remittance market on xe.com is actually showing that we're still at 17.29, and there's downward pressure on the dollar. So we are seeing that dollar heading towards that 17 point, and all of this is still on news that in the next couple of days, be it today, be it tomorrow, there is expected to be news of a deal done regarding our debt, and that will actually have some news. But there is some bigger news also that has kept up on from the central bank as well. Now, we did see the stock market move up positively slightly yesterday. That was mainly due to a move of British American Tobacco, which was the main one, which had a pull upwards of about a percent, just under 2% yesterday. Now, as a result, we also did see that the bond market also did move positively yesterday as well. Slight movements up in the dollar-based bond market as well due to the exchange rate, but also main movements positive, only slight movements positive in the interest rate. So getting up to the auction time, we're not seeing higher interest rates. So we're not seeing higher or lower interest rates, which means that we're not scheduled to probably see any changes in the actual auction itself. We may see some high levels of subscription, but nothing in the actual auction itself. And there's actually news pertaining to changes that have actually happened to auction rules that have come from a directive from the Bank of Zambia. So we did actually see that coming out yesterday in the news, and it was published yesterday, even on Bloomberg as well, just to verify and certify the circulation yesterday. So we have seen that markets are opening in a positive fashion. Sorry, Vernon, I think we're getting a little bit of feedback here, but markets are opening in a positive fashion as of today. Now, we have seen that even on the Rand, we did see that the Rand did dip by 1.5% as well, pushing everything down year to date, month to date, week to date. Everything is in the red if you are holding Forex. So this actually means that prices of things that are coming in from our cross-border traders can actually come in slightly less, but for now it's not fully, because most of the month as we've spent with a weaker kwacha, and we have just ended the month with a stronger kwacha, so that might also affect or the oil market conversation. But year to date, we have seen that the dollar is down 3.1%, and also that the rand is down 7.72% year to date around the month. The dollar is also into the negative of 8%, while the rand is also down about 3.8%. Now, moving into the markets, we also are seeing that bonds were up 0.1% in terms of the index yield, in terms of the index itself, the GRZ S&P bond index. But we did also see that the US dollar GRZ index also is up about 0.39%, up 2 point, and interest rates dropped just by 0.002% yesterday. So we actually still are seeing slight positivity in the market, but that huge spike up is mainly because there is anticipation of what is to come. But the changes in rules do slightly affect what we're expecting to see on the market. Now, on the other part of things, on the commodity sector, we did see also that copper was up 0.69% on hopes of a China recovery. We'll be giving news about that later. While oil jumped about 2.54% as well, also on positive news of China and also on some news of rate dovishness that we're seeing in central banks around the world. But gold also pushed downwards yesterday, as we're also awaiting any further news from Federal Reserve Chair Powell as well in his testimonies that are occurring. Now, here's some of the news that's actually talking about commodities in general. Now, we are seeing that is actually pushing pushing for a recovery, and there's a commodities market a commodities rally due, probably on the other side of this next on the second half of the year, mainly because the inflation trade is over. So the Bloomberg Commodity Index busts through the downward slope trend line. So it's actually starting to show that there is a slight commodity rally starting to come back into the market. So keep an eye on what's happening there, which will actually affect things like copper, but also unfortunately affect things like oil. Now, in terms of wealth insurance products, we did see that Bitcoin actually had a positive day yesterday on the same news of BlackRock filing for a Bitcoin ETF, while we're also seeing Deutsche Bank also holding custody services. So seeing Deutsche Bank and BlackRock getting involved did push Bitcoin back up to year highs of about $29,000, pushing it in Kwacha therefore to 524,000, even with the weakness of the Kwacha. Ethereum up 6% because it was buoyed up by the strong sentiment of Bitcoin. So it's back up trading. So that's why I keep warning you people. Bitcoin and Ethereum are very volatile assets. So it takes time, people. It takes time. So do not always overstate what position you have in those things. Hold them as part of your portfolio, but don't make them the core of your portfolio unless that's your core business. Now, gold, in other words, also is in Kwacha, also dropped by 1.4% due to the drop in gold and also the drop in the value of the dollar. So these two things played out yesterday. Now, finally, here's our broad market look altogether. We did see that our broad market look altogether. We did see that bonds are up 12.8%, stocks up 12.3%. The USD is down 3.1%, gold up only 3%, and our cryptocurrencies, the main ones that are holding strong positions, with Ethereum still only below 49%. It's been trading at about 60% above at year to date, but now only Bitcoin is the main one rallying. Now, in terms of oil, we are expecting now the pump price to only be about 0.83, 0.83 where now, sorry, 0.83 kwacha. Now, this is a very important day because around the 21st is when we start to see the ERB start to get ready to start doing its calculations for oil itself. So this is where we're expecting it. So probably you'll expect the price to stay flat, if not the price coming down, but that's mainly due to the average over the month has been a weak kwacha altogether. And finally, let's take a look at our inflation, our four horsemen. Before we cross over into the break, we did see that UK headline inflation is down and PPI is also down. But unfortunately, UK core inflation is at a 30-year high, pushing the Bank of England for rate hikes. We did see, unfortunately, we didn't get the data in time, but we did see that crude inventories did also come down, pushing oil prices up. South African core inflation and headline inflation both dropped 5.2 to 6.3%, while US MBA mortgage rates dropped for the third week in a row, down to 6.73%, and US 20-year auctions also auctioned higher. Brazil did maintain its interest rate. German 30-year bonds auctioned higher at 2.36%, while we also saw car registration data coming in from UK, Italy, and Germany, showing that the auto industry is starting to recover with strong numbers. US Red Book sales also rose by 0.9%, showing sales figures also starting to pick up, while Canadian retail sales also went up 1.1%. And US mortgage industry showed the second consecutive week of consecutive growth as well. But unfortunately, trade trends coming out of the UK also came in negative. So we are seeing that there is mixed reads starting to come out of the industrial sector, a little bit of growth coming back into the global economy. Interest rates are starting to hold back a little bit, while there are pockets of where it's bursting in a bit. And inflation news in general, it's starting to become where it's starting to be registered in specific places. But generally, we are seeing positive inflation news of headline inflation figures around the world coming down. It's unfortunate for places like the UK where they are experiencing massive food inflation, where things like the price of sugar are up 45% from the last year. They're experiencing record levels of food inflation in the UK. So that's going to lead their interest rates to continue moving upwards. I'm going to come back with news on the other side of our deep dives, where we're going to talk about bond auction news and also news that's coming up in terms of interest yields, that are interest rate movements that are happening from central banks around the world. You want to stick in for that, especially given that it is auction day today on the bond market, and we will see all that data coming in tomorrow. Vernon, I hand it back to you, as I'll see you on the other side.
Alrighty, welcome back to it as we now finish the last session.
All right.
Right,
Thank you very much.
Hamilton.
I'm fine, thanks. I'm fine, thanks, Vernon. Thank you very much for getting us back today. And welcome back to everybody. We're getting it on the other side of our deep dives. First big story that came out yesterday is Zambia caps foreign bond with debt deal seen as imminent. New rules have come out of the central bank as of yesterday, effective immediately, that caps non-resident purchases at bond auctions. I'm going to stress this point, at bond auctions to 5% of issuance as a part of overall debt sustainability efforts. Now, part of this has to do with appeasing China, who has previously taken issue of the decision to exclude local currency securities held by foreigners from the nation's debt restructuring. So that's actually quite a big piece of news as of yesterday. So remember that this is actually going to take effect even for this bond auction coming in. So as foreign investors want to now start participating in this bond auction coming in, mainly probably to try and buy up Zambian government debt. Remember, one of the most attractive things to them is that Zambian government debt securities are not going to be included in the debt restructuring. So any haircuts that are to be brought on for Zambian debt restructuring are not going to be included. So government bonds are not going to be included. So if a foreign bank, for example, holds government bonds, now what has China taken issue with this? Why has China always taken issue with this? And one of the reasons, sorry, I think we're still getting that. One of the reasons that China has still taken issue with this matter of offshore investors. Sorry, team. I think yeah. So one of the things that China has taken issue with offshore, especially Western nation investors who own government securities, being able to get out of the debt restructuring, is what they're probably likely to see is that a bunch of Western investors or offshore investors are going to sell off their euro bonds, which they know are going to get massive haircuts, get a discount on them, exit those positions, and then go into buying government bonds at much higher yields. So they're going to come there and start demanding very high interest rates to cover their losses from what they're going to do selling their euro bonds for nothing. So that is what they're trying to mitigate here, is that you'll see a nothing sell-off of euro bonds. So they'll really discount them heavily just to get out of them. So in other words, the price of the haircuts are going to be factored into the new price of Zambian euro bonds before these bonds get restructured. Okay. So what the Chinese have been complaining about is that, look, we are not holding securitized debt. These are direct loans to Zambia. So when we take a haircut, we are going to take a haircut. Okay. But these guys are going to trade their way out of their position and find their way in Zambian government bond auctions. So that is what they're trying to protect. Now, how effective is this going to be? Not that much, because all that'll happen is that the directive from the central bank does not prohibit or limit offshore investors from buying bonds on the secondary market. So all we're going to find ourselves seeing from now onwards is that offshore investors are just going to find themselves buying up bonds from the bank. So the first thing you're going to see is that banks are probably going to sell off their huge portfolios of bonds. Remember that banks inflated their bond portfolio over the last 2 years. We actually saw banks investing a lot in GRZ bonds. So now they're going to sell off those positions. Now, once they've sold off a lot of those positions, what we're likely to see is that the banks are going to start acting as agents for the offshore investors who are trading out of those positions. So the directive does say non-resident investors. So there have been questions that have been aired out is what does this mean for Zambians who live abroad who invest back home? What about them? Does this affect them? Now, one of the most fundamental things I've seen about Zambians who invest in government bonds who live abroad is that most of them have got localized bank accounts. So probably, and obviously we're still trying to get a lot more confirmation on this. This is highly unlikely to affect the Zambians who are living abroad, who are investing. I think this is to target the institutional investors who are in the conversations with China, because this has to do with the fact that China is not happy that your big American banks have a way out of these haircuts, while the Chinese government and their lending institutions do not have a way out. So they're going to see it as unfair that they're going to have to eat a lot of this haircut while their friends are going to be able to trade themselves out of the haircut. But they're still going to be able to do it. Because all they'll just start doing is buying up secondary market government bonds that are sitting in bank balance sheets right now. And banks are full of government bonds. They're making up about 25% of the government bond market. In fact, they're the biggest bondholder right now. In fact, I'm sure that with the bonds that NABSA has probably been selling to the banks, you'll probably find that banks have consumed even more bonds right now. So they've got a lot of inventory to sell off. So what you'll just find is now they'll just be an intermediary. Now, this will mean that banking profits are probably going to be higher. So look for companies on the stock exchange who mainly deal in GRZ securities. They're probably going to find their banking profits are going to be higher. So this is what we mean when they say China is in a precarious position where they have a lot of debt that they're holding on to. If you look at Zambia's bilateral debt, China makes up 76% of Zambia's bilateral debt, and that is debt that is untradeable. They cannot trade out of these positions the same way Euro bond holders can. So this has been their concern. So maybe limiting them is just going to limit that first shot in the arm where you find a lot of people trade out their positions on Euro bonds, jump into tomorrow's bond auction, today's bond auction, and quickly push themselves and quickly push up the yields that they can so that they can get out of it. And this is what I think they're trying to avoid for the meantime. But like I said, how effective it's going to be is a different story because the secondary market is unlimited. In fact, if anything, it is just going to make bankers extremely rich, especially the people who work in treasury offices. They are going to be if you see bonuses, Vernon, at the end of this year in the form of Beamer, Benz, and Bentley. Just remember, just when you see a guy with a new car or somebody, just know, yeah, I must work in the securities division of a bank because this is going to help them. Because that trading opportunity is going to be the big things. But the big news as of yesterday is Zambia as a nation has capped participation in auctions, not in secondary markets. So now there was a question that was levied earlier, and I want to try and answer it maybe on air as well. Is that will this have an effect on the lending rates then? Will lending rates fail to come down? No, actually, because what it'll do is it's just adding an extra layer to the offshore investors. But with them still participating in the secondary market, you will still find interest rates starting to come down. And in fact, the incentive is for banks to buy the things at high interest rates and sell them at low interest rates to keep the interest rate market under control. So you will probably find that what this will first do, the first step it'll do by that limitation is that it'll drive a lot of the offshore investors to buy the bonds that are sitting with banks right now, giving banks a lot more liquidity to start lending commercially and not just in terms of investing in GRZ bonds. So I think that is one of the things it'll do, because I think that is what everyone is trying to get, is trying to get the buyers for the banks to free them out of the position. Because right now you have a lot of bonds owned by banks, which are now basically the government is now beholden to the banking system. So the first thing they want to do is they want to try and get the offshore banks off the offshore investors to buy off the banks' portfolios, get the banks lending into the market, and then we can move forward from there. So I think that's the big question there. So if you're an offshore Zambian, I don't think you should be worrying about this. Like I said, especially if you have a domestic bank account, I don't think you should be worrying about this, especially if you're a Zambian who still has your passport. 97% of Zambians, or 95% of Zambians, who live outside still have their passports. They're still citizens of the country. Even if they've been there for decades, they're still citizens back here. We hold on to our citizenship very strongly. So I don't think this will be an issue for you at all. Remember that you if you have a domestic bank account, you pretty much are you're probably looked at as domestic. But then again, a lot of this is not confirmed. So call up also the central bank as people, if you're from outside, to figure out what's going on so that you are in the clear as well, and you're not just caught unaware. But this is a new directive that came in as of yesterday. Now, other news we've picked up from the market is that rural electrification as budget is expected to increase by 156 million kwacha, mainly due to a deal that's been signed where each constituency development fund is going to allocate 1 million kwacha to each of to rural electrification authority, so that it can actually work with each of the constituencies. Now, this is also part of an Africa-wide strategy to start using decentralized mini grids to supplement grid expansion. Because one of the things we're seeing is that the grids are not good enough to meet the needs of especially the rural areas. Mini grids and household solutions. We'll be talking about that tomorrow, by the way, when we're talking about the future of clean energy for Africa. From the Africa Gateway Summit, but we'll be talking about that as well. So this is also part of an Africa-wide strategy that we've actually seen implemented. So utilizing the Rural Electrification Authority alongside a partnership with CDF will also help with CDF actually being utilized for something positive as well and something useful as well. Not just buying cars, but we're actually seeing that some CDFs are being used properly, thank goodness, and not just for purchase of vehicles. But let's continue moving here, and that's part of the news in terms of the electrification of the rural sector. Part of what we've also seen in terms of the interest market. Now, this also affects all the debates that are happening today. Remember, today is the kickoff of the new financial pact that's happening in France. In Paris, France. Now, what we're seeing is the ECB also has announced, one of its members did say that the ECB has completed most of its interest rate increases. Bank of France Governor Francois Villeroy, I can't even get the last part, but Del Hoy said that any additional increases in interest rates will now be data dependent, and they will be observant of what they're going to be looking at as well. So the policymakers' comments add caution to heated debates at the ECB over the outlook of interest rates. So, with more hawkish colleagues warning of interest rate hikes, this kind of counterbalances it. So, we're starting to see the ECB having conversations about slowing down of rate hikes. And this is not the only side. We've also seen Federal Reserve Governor Bostic also joins Goolsbee in their dovish calls to wait and see before resuming rate hikes. Now, Bostic did say yesterday that if we simply press on with additional rate hikes, we needlessly drain too much momentum out of the economy. So another vote is now leading up to wait and see. Now, waiting to assess economic data, Bostic urges, should not be interpreted as inaction, because if inflation continues to fall in the months ahead, so they're trying to look at it. So we're also seeing a data dependent crew building up in the Federal Reserve as well. Now, Powell did come back and say, look, probably half a point in his congressional address, he did say, look, probably half a point hike is a good guess of the policy outcome. So Powell did say that he would not characterize the Fed's decision last week as a hold, but instead a steady pause, and noted that the fact that a majority of the policymakers still see 2 quarter point rate hikes, or at least 0.5% for before the end of the year. So there's still a push upwards in terms of that. So there is a tension building up in the ECB and the US Fed about continuing rate hikes now, because they're starting to see inflation cooling down in many of the areas, mainly because energy inflation is down, food inflation is down. Though we're seeing pockets of food inflation that might start picking up, but energy inflation is down, food inflation is down. That is leading to slowdowns in core inflation, though in the UK it's still rising, and the battle is still happening between there. Oil did rally yesterday as grain markets tightened, and the dollar fell. And this is on Federal Reserve Chair comments as U.S. corn and soybean prices raced to multi-month highs. Raising expectations that corn shortfalls would lead to lower biofuel blending and therefore increased oil demand. So, in other words, remember, where there's less corn in the market, there's less biofuel. Less biofuel leads more oil, and therefore that pushes the price up. So it's speculative at the moment. It's not talking about the demand side of it. Also supporting oil prices yesterday was the US dollar fell against the group of the basket of currencies, as Federal Reserve Chair Powell suggested that the central bank is nearing its policy destination. So he did also incline towards the fact that they're nearing the destination. As a result, that has pushed oil prices up in the slightest bit. So we're still expecting, if we're looking at any price movement of the pump price in Zambia this month, it's 80 way upwards, not anything really downwards. But we'll wait and see what the calculus that's being used. Copper did firm after China's rate hike yesterday. Copper prices rose in an extended mild gain prior session after the Chinese central bank did cut its interest rate. Copper was buoyed by hopes that China's economic trends will improve and amid stimulus measures, because China is going to engage in a lot of business stimulus right now. But broader sentiments over Chinese economic recovery have soured, and a slew of major investment banks have been cutting their outlook for the Chinese economic growth. So outlooks are therefore saying that copper may not be good this year, next year. Remember that our thesis for copper is probably 2025 onward, when we're expecting the big push upwards, when we got more of a copper surplus, when smelter capacity is up in China, Indonesia, and India, and also the EV sales are up to probably 30 million, triple what they are today in 2027. So this push of copper is probably likely to happen on the second half of this decade, not on the upfront part of this decade. So we have to really balance out our outlook for copper and be patient if you're looking at them. And finally, for the crypto news yesterday, we did see that the Federal Reserve did see stable coins as a form of money and wants a robust role in its oversight, as Powell did say. Powell's comments came yesterday in response to committee member Maxine Waters, who asked what has been the reaction to the stablecoins bill, which originated from the Republicans and would be the first legislation that the U.S. would put on the table for cryptocurrency if past. So that is some of the major news that is coming out of the market. We're seeing interest rates managing to hold still. We're seeing interest rates probably slowing down, rate hiking paths for the major economies, except for the UK, probably going on to a slowdown. We're probably going to see, therefore, we're seeing that the appetite for offshore investors to start going out into emerging markets, they're going hard into emerging markets right now, which can now float into countries like ours if we can get our debt resolved. Remember that debt restructuring is being promised or being stated as though it's a few days away. So remember, everybody's going to really be watching and waiting with bated breath for an announcement over the next couple of days whether a debt deal will finally be reached for debt treatment. And that is some of the news that has come out today. I don't know if we still have Vernon back at the moment. But we'll await his return. Our chart of the day, because today is Enterprise Thursday. So our chart of the day is actually going to be in the business sector. Now, globally, there has been this conversation about zombie companies. This is not just in America, it's all over the world. There has been a conversation about zombie companies and the rise of zombie companies and their prevalence. Now, a zombie company is a company which is being kept alive by access to credit. So what we've actually seen in terms of zombie companies is it's companies where their profits are less than their interest payments on debt. So meaning they have to borrow just to even continue paying interest. Because at that point, they don't even have enough profits to pay off the interest of their debt, let alone repaying the principal. That is a zombie company, a company that is on financial life support. And we are seeing this is the trend of zombie companies historically. As you can see computed, this data shows that zombie companies have been on a continuous rise, especially from the 2000s onwards. Now, private zombie companies have gone from less than 1% of companies in the Western world to almost 6% of companies. That's a huge number. And we're actually now looking at public zombie companies, in other words, publicly traded entities where there's pension money and all sorts of things. Those numbers are sitting now somewhere north of 10% of companies. And now, in some countries, like let's say Germany, France, we're even looking at about 20%, one in every five. So we've gone from one in every 20, not one in every 20, we've gone from one in every 50 companies being a zombie company to as high in some estimates as one in every five. And the share of zombie companies is getting higher and higher, mainly due to the fact that for decades, there'd been stimulus in the economy, which had created a lot of zombie companies. But how did we get to a point of zombie companies? And one of the things that has been actually put up as one of the drives behind zombie companies is businesses that do not have good products. Because the core of a business is a product. People don't just come to your business to just hand you money from the sky. They come to your business because there is a product that meets their need. Okay? So that is actually something that's important. So the best way to stay off financial life support is to make sure that you have a product that meets a need. Okay, so that is why we call today Enterprise Thursday. Today is for the entrepreneurs in you, and you want to take down notes because we're going to be talking about establishing product market fit and a little word from Mark Andreessen. But one of the things that we've actually picked up, and I'll figure it out for today, is the number 73% of Zambian companies are Zambian companies are less than 5 years in existence. Additionally, 50% of Zambian businesses are less than 3 years in existence. This is off a Money FM survey that we did, entrepreneurship survey that we did in 2019. So this is also generally important data for us to know. What is it that is putting a lot of businesses that is actually giving us this kind of a problem? Now, why I say this is that when you look at PACRA data, for example, every single year we register more than 10,000 businesses. Every single year we register more than 10,000 businesses. But almost over the last 9 years, the number of businesses filing returns at PACRA has only grown from about 28,000 to 42,000. But for the last 10 years, we've been registering 10,000, meaning we should have tens of thousands more businesses that are operating. So, what does that mean? It means that the life cycle of businesses in Zambia is not long. As I said, I don't know if we have Vernon back right now to discuss this point, but it means that the life cycle of a business in Zambia is not long at all. And one of the questions I think we all need to ask ourselves is what is leading to these short business life cycles? Or that are actually giving us to the point where 73%, in other words, 7 out of every 10 businesses, is only a business that's less than 5 years old. It's an under five. Because really, the big part of a business is getting past that first five. So I want to share a note. I want to share a video by Mark Andreessen, who's one of the first tech guys in Silicon Valley, who talked about the fact that too many people are building businesses with no product. Okay. And this is what's leading to a lot of the problems. And in fact, he even talked about the rise of zombies later, but it's not in this product as well. It's not in this clip as well. But in this clip many years ago, in an interview with Business Insider, he talks about the importance of establishing a product before you build a business around it, and do not rush steps to do that. So here's a take from Mark Andreessen.
I believe there's a staging. We don't believe there's a tension between product and business. We believe there's a staging, which is in this industry, you don't have a business until you have a product. And in particular, you don't have a business until you have a product that a lot of people want. We have this concept, we use the term product market fit, which is basically you have a product that the market wants and you can tell because the market's pulling the product. And until you have that, time spent building the business around the product is pointless because it's not going to go anywhere. Like best case, it's going to be a zombie. And that's not what super high potential entrepreneurs want to do. So what we basically say is if you want to build a big success, you got to nail the product. You got to it's got to be a killer product. It's got to be something that has product market fit. When you have product market fit, then you build a company around it, right? So then you build a sales force, and then you start doing marketing, and then you start doing business deals, then you start expanding internationally, and you do all this other stuff. And it's at that point where you start to apply a lot of capital, and you build a big board, and you start hiring executives and doing all this stuff. But a full executive team with a sales force and all that stuff before you have the killer product is a complete waste of time.
So I hope someone picked that up. So Mark Andreessen is actually trying to explain to you that a lot of people are jumping the gun in business. And I don't know if Vernon, if you actually picked up on that part and want to get your thoughts on it. What that video clip was talking about was about building out your sales, building out all your business infrastructure too early and too prematurely. So people start looking for capital because we're having conversations in Zambia about access to capital, access to capital. Then when people get that capital, the business goes under. Okay. And all of a sudden we're saying, but you were asking for capital all this time. You get given access to capital. You bought a car and then went under. What happened? It's because these businesses are formed without products in them. It's like you have a radio show, for example. Yeah, let's say you have a radio station, but you have no shows on them. You just have this shell. Now you're trying to fill it with content because you haven't figured out what actual content the customers need. So he's trying to say, first you want to build a product that people want. So what's your take, Vernon, on the issue of people acquiring capital without acquiring capital and building infrastructure prematurely without establishing a product that actually solves a problem in society?
I'm not sure if you can hear me. Okay, great. So, following what you just sharing regarding the same, I think moving forward, it's plain, it's clean, it's straightforward. Why would you acquire money where you have not structured what you're going to use it for? It's equally the same. Even in the Bible, it says you do not ask for anointing from God when you have no use for it. It will not work. As much as God's grace is there, so long as you have no use for it, it will just be but available but unused. It's the same with the business aspect. Capital is there. Access to capital is all right. It's there. Well, not as available as we may want it to be, but it is available. It's there. Opportunities are there. That's what I always tell people. And young people have always mentioned there are no jobs. There are no opportunities in the country. But I always retaliate because Mutwala, you will agree with me that at the same time someone is telling you that There are no jobs in the country. Someone is getting promoted, someone is getting fired. There's an opening somewhere every single time. So why is it that you are the seemingly the one who's not getting or finding yourself these opportunities? Positioning. What are you offering to the company? If there is no value that you're offering to the company, there's no contribution, who would want to hire you? You want to rethink about that. Businesses that are always, this is what also precipitates people buying and getting into a business that already people are into, and then there's less innovation, there's less creativity. You are selling tomato mtwale, and I also come with my table and say, I want to be an entrepreneur, but you have nothing to offer to the people, so I'll copy what you're doing and also put a table next to you and also try to sell tomato or maybe 300 meters away from you. Where are we going with that kind of a thing? So it's mentality. If you want to build on that and have something beautiful and creative, and I think something that in the book Zero to One by Peter really builds and helps you understand and how you can actually create something new. Most of the people will tell you there are no new ideas, everything has been discovered. But on that book, it'll actually give you insight on some of the brilliant ideas. It will not tell you what kind of business, but it will tell you how to build on a new business that actually is about creating a solution to the people. It trickles. Numbers never lie, and research never lies. If you can track back to as far as you can anything centered on business, they will tell you business is about providing a solution. That's the onset of everything. If you're unable to find a solution and just go into business and offering something that is already there on the market, I don't think there's any innovation there. All you're doing is multiplying and extending whatever is already there. I was speaking to some young people recently where I was sharing about the continuity in the systems. You come out of college, you go into the work system, and all you do is continue what the other folks have been doing and not bring anything new, any creativity, any innovation, any inventions. There is no difference with those guys who are already in the system. You want to come and say, well, the new generation, we're unique, we're more efficient, we are more creative, we are this and that, we're in a new era, but there's really little that you're actually bringing on the table. So ultimately, if you want to understand this and actually be as brilliant as you can be with issues centered on offering something new to the market, you will want to be able to create something that is going to be of a solution to the society for starters, and you also want to just primarily be able to understand it's the simple things. People should not overthink. It's as easy as it sounds. Offer a solution, someone will pay you for it. So if you can't come up with a solution, don't seek for capital, don't seek for money, because this is essentially what will lead you just squandering the money because you had no plan in the first place. You have no solution where to put the monies at. So why are you even bothering to seek for capital? I'll end my thoughts there.
So here's the other part, Vin, and I'll even add to that. Over the last since 2013, I want everyone to recognize this is PACRA data. Since 2013, there have been 96,000 companies registered in Zambia, new companies registered in Zambia. However, when you're looking at the returns data, the companies that are filing returns have only grown by 11,000 over the same period. That means, Vernon, incidentally, we're seeing a churn rate of companies of 12 of what's it of 88%. So 88% of companies are not lasting. Okay, this is what it's effectively saying. Like, you register and you have an 88% chance of this company surviving. Okay, so a lot of people, you're looking for capital from the beginning on something. You want banks to lend you money from savers. Okay, because people say, no, banks don't give us money. Cool, but do you have a business with a product in it? Like, most banks will ask you, okay, can you show us 6 months of cash flow? Can you at least just show us 6 months of cash flow? People can't do that. You can't show 6 months of cash flow to justify the bank loan that you're looking for. So the probability here is that a lot of people are just looking to get their hands on money because they believe, there's a love of money mentality that rules this nation very strongly. They believe that if they just get their hands on money, every problem they've ever had in life is going to be solved. So if basically just registering a company will get them out of that. And it also tells me that a lot of these are tenderpreneurs, that when the tenders dry up, they're out of business. Okay, so this is what tells me that we don't have entrepreneurship in Zambia. We have tenderpreneurship where people are just forming businesses to go after a tender that's out there, but they're not actually seeing, okay, so there's a problem in society. Let me create a product. Let me solve this problem. Once I've created sustainable cash flow behind solving this problem as proof of concept that people really want my solution, then I'll be able to do that. So today, Vernon, I want to track through something called the 6 stages of product market fit. So, and it's been a journey that we've been doing from the beginning that we call the 6 fits. So a lot of you, I want you to try and now pay attention to this part of the conversation. So the 6 fits here in our topics of discussion have been founder market fit. We started by talking about what market are you suited for? Do you have experience? Do you have obsessions? Where are your obsessions? Where are your experience? What social inclinations do you have? What stories do you have with products? Where you find the intersection of those four is your founder market fit. We've then, Vernon, talked about problem solution fit. Have you analyzed the problems that people face and have you created a credible solution to it? And therefore, remember, I always say a business is a problem solved with a product built with a process. That's all that it is. Okay. Problem, product, process. That's it. If you just look at it as those 3 building blocks, it becomes a much simpler thing to look at. So if you're just looking at the fact that if you're looking at your business opportunity, have you seen a problem? A problem in society doesn't have to be something new, by the way. It can just be something that's underserved. Okay, it's not served properly, or there's not enough supply. Like if you're like Vernon gave the example of when you've seen me selling tomatoes. Have you seen that there's a constant shortage of tomatoes for you to come into the market? Or did you just see that I'm making money selling tomatoes, so you're just going to join me? Not knowing if there's a market shortage or not knowing what market cycles are at play. Okay, so what are you looking at here when you're making that decision? Is there a problem that led you to create that solution? Or did you create a solution and then look for a problem to solve with it? This is where people go wrong. You've created a business. Now you're looking for opportunities now that you've registered this business because you had dreams of becoming an entrepreneur, but you had no problem that you were thirsty to try and solve. When Money FM was formed, we saw a problem with financial literacy in this country. The founders of Money FM saw a problem with financial literacy in this country. They saw a problem with issues in this country pertaining to financial knowledge and the hunger that people were expressing for a place where they could go and listen, so that they could listen to get their finances in order, make better business decisions and better financial decisions at a personal level. That was the problem that gave birth to Money FM. So what you must understand, and this is what Mark Andreessen was trying to say, it's a staging. The problem must give birth to a product, not the product search for a problem. A problem must give birth to your product. Then your product gives birth to a company. Okay, so think about the product as the problem as the grandfather or the grandmother. Then the product becomes the mother. Then the company becomes the child. Okay, the problem is we're all building products, then we're registering businesses, then trying to figure out what products we can start in these businesses, then trying to look for a problem for these problems. So we're going the other way in this situation instead of saying what problem. This is why going through your 6 stages of fits is important. So that's the questions you need to try and answer. So let's talk quickly about product market fit. I'm going to take you through this very quickly. Product market fit is basically is being in a good market with a product that can satisfy the market. Okay, creating a minimum viable product that addresses and solves the problems or needs that already exist. Listen to me very carefully, people. That's a very important part. You're looking for products that exist, not ones that are in your head. Ones that actually exist in people's lives. And it's a step from validating whether somebody can be your customer to creating an actual customer. So that's what you're trying to look at here. So there are 6 things you want to try and look at, and they're just in S's. Remember, I'm a person who does this all the time. I get this is the same letter. C, signal, start, stay, spend, and sell. So let's break these down. C, how do you get your customers' attention? What triggers their state of need? What mental, physical, and emotional state of mind are they in? Where are they mentally, physically, and emotionally when they are in need? and how aware are they that they even have the problem you're looking to solve. So this is what you want them. This is how they see you. These are the factors. Take these notes down. Signal. How do you communicate? How do they communicate their desires? How do they communicate their desires that they're willing to try you out? What call to action have you placed in your marketing material? What's your first interaction or your first impression going to be with them when they make a signal? Start. What processes do they start? And these all go in order, people. What processes of turning their interest into first action is there? What low-level product do you have for them to be able to try out? Susan Mulongoti calls it the ladder of value. Okay, so at the base of your ladder of value, what's their first interaction product? What's the low-level cost product that you've got for them? And then what is your process of onboarding them into your system and capturing their information? Stay. How do you plan to retain them and get them to come back? What customer experiences, what customer experience factors are you focused on in order for them to continue coming back? And what feedback mechanisms have you built in order to incorporate their feedback into your product improvement? Spend. Now that you've got them to stay, Vernon, how do you intend to get them to climb up that ladder of value and start buying your more expensive products? Okay, how do you start making them go for your higher margin products? How do you plan on rewarding and retaining their loyalty? And what new features and offerings do you have for them to keep them exciting? And most importantly, sell. How do you encourage them to tell their friends about you? How do you get them to become net promoters? And how influential are they in their social circles in order to be able to spread? Do you have influential customers? Now, what you want to do is start by getting one person through this funnel, then get multiple people through the funnel. Then you want to, as you're doing that, you're going to keep getting feedback, and you're also going to keep learning how to keep improving your process, because this is very important. If you can figure out how to get someone through this funnel, then get 10 people through this funnel, then get 100 people through this funnel, then get 1,000, you will notice that a business will organically start forming. Okay, so first just start by selling a product before you rush out there to go and try and create a structured business, a board of directors, so that you can tell your friends at the bar, hey guys, man, I've got a board meeting tomorrow at my fit. What board meeting? You haven't sold a product yet. You've got a board meeting. Sell a product first, my friend. So start by actually solving a problem, even informally. Start by informally solving a problem. Once you have solved a problem, and you have now created a solution that you've seen works for 1, 2, 10, 100. By the time you've run that 6S through 1,000 people, your business would have formed. Naturally, Vernon, you would have figured out a marketing strategy. You would have figured out what system to put for accounting. You would have figured a lot of things out in that 6S process of how they get to see, signal, start, stay, spend, and sell your products to others. Once you can do that, you've created a business. Okay, by the time you get to 1,000, so a lot of you are trying to create a business, but naturally, out of the process of selling a product to 1,000 people, a business organically forms anyway. That's the thing you have to understand. Businesses tend to organically form anyway, so allow the organic process to play out. So a lot of people, and this is why people are rushing for capital, because you think capital will fast track your way to wealth, when really what you should be doing is creating the product. Here's the funny thing, Vernon, about capital, money, and everything. Money follows people who solve problems. That's the funny thing about money. It actually follows people who solve problems. If you want, as Davido says, money fall on me, then solve a problem. Then money will fall on you. Okay? But it's not going to, as he says, banana fall on, it's not going to fall on you the same way bananas fall on the monkey. It's not how it's going to happen. Okay, money is going to follow you if you solve a problem. So perhaps what you want to focus on, this is why I always tell people, why pray for money? Pray for God to give you a revelation of a problem to solve. That's where money is found. If you want money, pray for God to give you a revelation of a problem to solve instead of, Father, provide for me, provide you with a problem to solve. Okay, that should actually be the easiest thing that you should be considering. So I'm going to leave you with, and it's, as I said, the processes are simple. but they take time. They take habits. You have to repeat that process with 1,000 people for you to understand. But Phil Knight says in his book Shoe Dog, and it's the most famous quote in the book. When it comes to starting these processes, the cowards, and why I'm saying this is because a lot of people start businesses, but very few people survive. And he says the cowards never start, and the weak ones die along the way. And the statement that follows after that is, all that is left, gentlemen, is us. The people. So if you're looking at the fact that over the last 10 years, Zambia has registered 96,000 businesses, but the number of businesses filing returns has only grown by 11,000, meaning 88% of business registration results in failure in a very short space of time. What does that tell you, Vernon? Ain't nothing happening. Ain't nothing happening. So the weak ones, the cowards never register in the first place. But unfortunately, the weak ones are the 88% that die down later. And I think we have a question that's finally come out at the end here. To everyone, thank you for joining us today. But Silas Peary has said, "What would it says? What would it take for me to get mentorship?" The one thing I tell people, and in fact, even Vusi Mkwala said this as well: if you want someone to mentor you, be of use to them. If you can be of use to somebody, then they will mentor you. But if you can't just get mentorship because they're not going to allocate time to you. Be of use to them, and they will give you their time. So what value can you offer somebody? So once again, I'll come back to it. What problem is in their life that they need to have solved? If you can spot that and solve it.
I appreciate it. Thank you so much. We'll be looking forward to the next edition tomorrow. Thank you so much.